Welcome everybody. Today is September 28th, 2024. This is Saturday as I bring you this video. And I wanted to do this video early. There was a lot of stocks and charts to go over. So I wanted to bring you this. And the title of my presentation today is October Stock Market Shock Incoming, How to Prepare. So it's about 7:50 p.m. Eastern Time as I bring you this. Here's my disclaimer. Pause it, read it. If you agree, please move forward. And of course, my shameless plug on x.com/galaxy.market. Follow us there. A lot of great discussions and things that you will not find on YouTube, especially if you're not a member of our membership group. All right, from last week's video, if you haven't seen it, I really advise you to watch this. Market panic soon. And a lot of those components are coming true. And we're going to tell you how we are imminently on the verge of October sell-off-a-thon. Okay? October implosion, October crash, whatever you want to call it. We're getting there. Let's do some real quick. I'm not going to spend too much time on the news front, but I want to cover war drum beats strongly forward. Okay, so we know that Israel is basically attacking the crap out of Hezbollah in Lebanon, and so they basically killed their highest ranking person, Nasrallah, and people are beginning to choose sides. America choosing sides with Israel, Russia trying to side with their allies in Iran and everything else. And what I've always said is when they start imploding with inflation and the money system is no longer good, the bankers will take you to war. And the war drum is beating louder and louder. And any politician that says that they are for peace, they're lying to you. Okay, this is how they reset the monetary system. Pay attention to this. And especially if you're uber bullish in the stock market on this dead cap bounce, I believe we had a blow off top. We shall see. We'll go over that in a minute. And then, of course, in Swiss francs, if the gold is priced in Swiss francs, they are breaking out, and we're breaking out in the U.S. market as well. And I've been warning you in great detail about this gold. And I guess my question to you is, got gold? Okay, so now the second thing is our Sage of Omaha, which is Warren Buffett. And I wanted to show you this. This is going to take you to a section right here. And I want you to pay attention to this graph right here as we go. This is going back all the way down to 1980s. And as you can see, his stockpiles of cash surge is always coinciding with recessions and stock market crashes. Okay, enough of that. Let's go back. And so this kind of shows you what's happening here. And one thing that I do want to point out in this, and I don't want to spend too much time into this, is that his cash stockpile was the highest in 2007 and peaked around 2008. And as we started to sell off, and guess where we are? We are peaking now as our cash pile positions were going higher. In 2020, right before the pandemic crash, his stockpile was higher. You think there's insider trading much? You think the Warren Buffett might know stuff. They don't call him the Sage of Omaha for nothing, but it's really, really uncanny. Okay. The other thing is, I told you the banks are insolvent, and he has a huge stake in Bank of America. He's been dumping that like there is no tomorrow. All banks are insolvent, folks, due to the rising 10-year treasury. And we'll go over that also in this video. The fact that Fed cut in September 18th, 50 basis points, which is a large cut. Everybody expected it. That's what they got. The market should celebrate that. But they need to pay attention to the TNX, which measures the 10-year treasury yield, which is rising instead of declining. Okay, we'll talk about that as we move forward. Then again, we have SMCI. This is the chart that I showed you from last week's video. Okay, and then obviously we sold off and this week. Okay, and then we kind of stabilized on Friday. A little bit of a dead cat bounce. All we're doing is making a bear flag, right? This is a bear flag formation that is forming. There's always a cockroach, okay, that rings a bell at the top. We talked about Enron, MCI, WorldCom, okay. We talked about MicroStrategy during the dot-com. It's always related to accounting issues or fraud. And SMCI's problems that the DOJ is now investigating is far deeper, and it is not relegated to just them, I believe. And there's speculation, it's just a speculation that NVIDIA, several of the other, like Micron, all of those guys may be engaged in similar type of accounting gimmickry. I talked about, and this is a chart, this is updated as of last Friday, that I said, hey, is SMCA ringing the bell at the top? Okay, and I believe that wholeheartedly. Now, there's for those of you that are looking to play this, hit me up. Think about joining my membership group because we are actively engaged in this SMCI situation, as you know. Okay. Now, this is the one that I talked about after 50 basis point cut on the 18th, denoted by this arrow. We have done nothing but go up and making this kind of a bullish flag formation. Nothing has changed since that rate cut. We have been basically above that level. The idea of a 50 basis point cut, if a market is healthy, it should be bringing the yield down to save the banks. That is not happening. Why? Because the world is engaged in, all the central banks are engaged in race to zero in terms of their currency. And I said that before, and some of you have ridiculed me on that, but it's okay. All right. I don't get everything right all the time, but writing is on the wall, folks. And if you look at what China is doing, and they cut consecutive bazooka style, I'm in panic, everything's going to go to hell if we don't save the stock market type of intervention right now. Why would they be doing that if the world was healthy? Just like Powell said, that he's not worried. Because the world is entering into something greater than a recession, okay? And that is coming in the election year cycle, no less, okay? Those of you that think that the stock market cannot crash ahead of election cycle is going to be sorely disappointed. And then this is the topic of today's video. Okay. And here's my uptrend line. Okay. This is the updated as of, September, 27th on Friday as of the close. We're still not hitting the upper trend line. Okay, but we are inching higher and higher. There is a lot of distribution and churning going on right now. In fact, I believe we're on count 5 of distribution days since last week as I started tracking this. Okay, the question is are we going to tag that upper trend line before the market starts to sell off? Or are we going to correct here and then after the elections start going back for that after a meaningful corrective phase down? Okay, so that's something that we need to pay attention to. All right, so the expected move is nailing these movements. So pay attention, and our members will get all of these numbers, but this is a proprietary, options based calculations that I do, and we basically tagged that just below that line and came back in. And if you can notice what's going on is that we have a little bit of a tail candle formation. Now, it doesn't mean anything. I still want this market, hopefully, before the October 2nd Rosh Hashanah start, to hit that upper trend. That would be great, okay, because that's going to give us a very defined objective entry for our short positions. However, I believe we are topping out right now, okay? Distribution is entering into the market action on S&P 500 futures as I talked about. All right, so the greed is basically increasing. We are at 68 right now. Last week we were at 63. And while we're distributing, churning at the top, the retail bag holders, yes, I'm talking to you guys, all right, are bullish and cannot see straight because everybody has been conditioned to think that the markets will not crash ahead of election, which is literally weeks away. Okay? I got some surprise for you. The market is telling you and warning you right now. Okay, that is the topic of our discussion today, is that we are imminently warning of a market correction. Okay, this is contrarian. Do not become a bag holder. Do not become exit liquidity for Warren Buffett, please. All right, so we talked about this on the last video, and you can see the U.S. Fed funds target rate as they start cutting have always led to some form of financial crisis, recession, or worse. Okay, big outsized first rate cuts and pivots lead to market crashes, corrections, or market dislocations, and China now has joined the act. I think there is a financial warfare being waged between China and Japan, but regardless, it impacts globally. All right. If the carry trade on the yen is dead, and I don't think it's done being unwound, I talked about that. I'm not going to that in detail on this video. If you want to see what I mean by that, watch my previous videos up to a month ago. I've been saying this and it's getting pretty old. Okay. All right. So this is the China news I'm talking about. They are sending the bazooka to the Shanghai index, and then which caused a glitch. I don't think it was a glitch. It was all purposefully done. But they don't want to send the wrong message either. Their market is so healthy that they're willing to stimulate the markets into oblivion at this point. And all that's doing is having a lot of these hedge funds and quant funds into a massive short squeeze. And that's what they're engineering. And so we're going to have these episodes, even now, we're going to have these sharp rallies and then sell-offs, but we are stalling out right now. What is China afraid of by cutting rates on consecutive days in the manner that they're doing it? Something is wrong, folks. Something is wrong, okay? I'm not going to go too much into this detail, but this chart, pause it and watch all the cut cycles, which has led to a Fed initially a bounce, and then it always leads to these types of drops, okay? And of course, Fed is going to be cutting just like China, okay, in panic. You're not going to have to wait for the Fed for the FOMC meeting, which is what I think a total BS dog and pony show. You don't have to wait for that. Fed will preemptively cut rates and they'll blame it on something, okay? So this is from the housing bubble from 2005 to 2006. They went on a hiking spree, and that basically started choking off the economic productivity. If you don't believe Fed creates recessions, I got some news for you. Believe it. They do create it, okay? Now, gold, folks. We talked about my phase 4 parabolic process. If you want to learn more about that, you're going to have to contact me, and we'll have that description in the description below. We are having phase 4 parabolic process in full swing. We're warning a black swan type of event or imminent failure in somewhere, okay? The way China is behaving, the way our stock market is moving higher along with gold, something is wrong, and there is a imminent black swan or sell-off that is happening, okay? And this is as of yesterday, but you might say, hey, Brandon, but the thing is, this looks like a bearish tail candle formation. Guys, we went over 2,700. I think we hit like 2,708 before we pull back. It's allowed to pull back. It's not going to go up in a straight line. And what I'm telling you right now is that I believe we're moving much, much higher. It's going to shock you where this is going. This is just a function, okay? And a lot of you function of the inflation and faulty printing to oblivion monetary policy while they're lying to you as they're basically eroding your income and your purchasing power and your wealth, right? Who is this they? People like Warren Buffett, the Federal Reserve Bank, and the politicians. I think Nancy Pelosi is the greatest stock market trader of the 21st century. I mean, how did she know? How did her husband know to sell Visa, right before they announced the antitrust issues? Anyways, regardless, gold is going higher, folks. In the next couple of weeks, I see this hitting 28.50 or higher. Okay? So that's what I've got for the gold. Okay? And now I have this situation I've been harping on, selling Rosh Hashanah and buying Yom Kippur. And after all, that is exactly what the topic of my video is today, to warn you that Rosh Hashanah starts on October 2nd. Hey guys, that's this week. This is what this video is preparing you about, right? I am warning about an October stock market shock that is coming. I'm going to show you how to prepare, how we're preparing, not financial advice. You guys do what you want to do, but at least I want to get some thought in your head about thinking about this, okay? This cycle, I think, ends with Yom Kippur, which starts on the October 12th or 11th, I forget. Okay, so it's going to be about 2 weeks of some significant selling pressure that it's going to come into the market. It's already telling you that's what's happening, folks. All right, now this is the warning that I've been talking about, but please, it doesn't mean that it has to start on October 2nd, but from October 2nd and beyond, you need to be careful. The market is rumbling and telling you that something is coming and headed our way. Gold is moving higher with the markets. Bitcoin is about to break out higher. We have 10-year treasury yield measured by TNX moving higher despite the 50-point Fed cut. Okay, dollar is moving lower. I warned you that, yes, last week that VIX, okay, we're going to go over some technicals, but VIX is likely bottom, maybe go down a little bit lower, and it hit it hit basically the 14.9 level, just about 15. I thought it would bottom around 15.2, went a little lower, and now we finished on Friday. Watch that VIX. It finished almost at 17 from that level. Okay, you know how VIX can move. These are all signs. Now, it doesn't have to mean that we're going to crash imminently. Okay, but you have to prepare. You either prepared and be ready for what's coming, because I think Warren Buffett is preparing. Okay, are you going to be a exit liquidity for Warren, or what are you going to do? How are we going to trade the situation, right? Well, first and foremost, before I get into my technical analysis, I wanted to show you, this is SPY as of Friday statistics. Notably, I want you to look at the call volume versus the put volume. When there is this drastic differences in put volume into the close on a Friday ahead of Rosh Hashanah, okay, which is October 2nd, there is some significant issues, okay? Our current IV percentile is 24%, far below the historical volatility percentile of 50%. Not always, but these are the things that should be raising your eyebrows. It's not rocket science, folks. Pay attention to what the SPY stats are telling you, okay, what the big boys are doing. Don't be so blind that you are basically going straight into call buying sprees or going long on shit like NVIDIA, or you think SMCI might have bottomed. SMCI is going lower, folks. So let's delve really quickly. I'm not going to spend too much time on this, but VIX has bottomed on the RSI. We're gaining some strength right now, and I have this kind of arbitrarily put there because if you really look, we still need to get above. But I did say previously that these levels are exactly where we're going to find a bounce, and exactly that's what happened. We found support right about this blue trend line that I told you about. We are imminently about to break higher, okay? And so what do I mean by higher? Yes, we have to get imminently above these two trend lines, but we have to make sure that we are about understand that the VIX has bottomed, folks. We've been buying our VIX calls, okay? Again, if you're curious about it, email me, okay, in the description below, okay? There's ways to get a hold of me. I'm on WhatsApp. You can email, message me on x.com. Whatever the case is that you need to do, go out there and let's have a discussion, okay? Look, the VIX is showing you on the MACD that we're about to form a bullish cross. We have the MACD histogram going higher. We basically stopped going down on the commodity channel index, and we're going to move higher, okay? I think that's enough talking about it. Where do I think VIX is going to go? I think there's some significant crap coming down. I don't know if it's the war. I don't know if it's going to be some weird stuff happening. I don't know if there's a financial problem with Evergrande. Remember that in China? Okay, I think China's going to go through the 2007, 2008 type of financial collapse that we did, except it's going to be 100 times worse because, we rig our own currencies, we print money to oblivion, but so does China. They might have more gold. I don't know. But I think this is going to put this to shame what happened back in August right here. Okay, I think we may be going much higher than that, and don't be shocked if it does. I mean, October's going to shock the crap out of you. It's going to be trick or treats, right? I think it's going to be a lot of tricks, not very little treats, unless you're short. Okay, Not financial advice, but that's something that we're preparing. TNX, I beat this thing to death at this point. I think we're moving higher on the RSI. We basically are running into some resistance. We're going to pull back to this 80 MA. I think we're moving higher. I think the Fed has lost control, or maybe they're doing this on purpose, but this is our TNX that I've been talking to you about. Let's talk about SPY. Okay, again, SPY basically is flattening out, maybe going lower, right? We're beginning to form some divergences. Here's some black candles near the top. Okay, distribution. We're beginning to see declination of any buy volume. Any days that it's been going up, it's been on lower and lower buy volume. We do need to see some participation in the volume, but you know what? People are buying up puts like there's no tomorrow. This is the weekly chart anyways, on the daily chart, and we have a death hook beginning to form on the MACD. Our histogram is coming down, CCI is coming down. We have stochastics already warning you that it's basically flattening out. There's no more momentum. It's going to start selling off. PPOADX is non-committal right now, but I think this is going to start doing one of these things, okay? I'm waiting for this to turn, okay? And then this to start going here, come up here and then come right over here, all right? Accumulation distribution, everybody that's bought has bought, and you're the ones who are only buying. It's the retail bag holders that are going to be soon to be bag holders. All right. And then we already crossed below here, which means that we're imminently on a directional change. I don't mention McClellan Summation Index because I think that's broken. And for now, because of all the dislocations put into the market. Let's look at this SPY weekly. Okay, weekly is very telling. RSI is losing momentum, even though we're churning higher, right? This is churning higher. This is definitely bullish. And you guys are saying, well, can it go move higher? Yes, I think so. It could definitely do that. We have declining volume. We're above all the moving averages. We broke out of this area. I've been trying to, we hit 575, but I think that may have been the blow off top moment. Would I like to see 585, 600 before the correction happens? Hey, but we're running out of time here. Okay, Rosh Hashanah is coming up, and I believe something big is coming. Gold is telling you that. TNX is telling you that. China is telling you that. Japan is telling you. Everybody's telling you. SMCI is telling you. Come on, guys. How many more signs do you need to basically understand that? When this thing breaks, okay, the key critical level is 561. Okay, 77. Okay, right here. Okay, so 561, it's this red line right here. If we break below there, we're going to gain steam, and then we may find some support right at 541, but I think we're going to keep going down until we come all the way down into this area. Okay, these are some of the levels where you might find support, so pause it and watch it. Okay, and so that's what we have on the weekly. And then I want to talk about SMCI a little bit. SMCI might undergo a little bit of a bounce. Possibly. This is the weekly chart. We found support right at the 100-week moving average, but here's the downtrend line. If it gets above there, yeah, we can go right back up into this level and then come right back down. Any bounces on SMCI should be bought, and if you're screwing around with puts, or you got to buy time, and if you need to learn how to calculate the adequate time that you need to buy in the strike prices, hit me up. Let's talk about it. All right. Costco reported earnings. I did some videos on it, okay? Costco is forming some bearish formations and divergences forming, okay? I think it may try to maybe regain that 921, but ultimately, in the next couple of weeks, we're moving down, folks. I mean, the MACD is telling you that it's losing momentum. Okay, it's just beginning to do that. The histogram is negative. CCI is telling you it's going to start selling off. And then, PPOADX is a little non-committal right now, but once we form those signals, I'll let you know. But this is something that you need to watch, right? There's some of you that front ran earnings. Like I said, if you're going to front run earnings on a stock like this that has low IV percentage, okay, you have to buy time with this situation. All right, let's look at Tesla. I've been warning a lot of people that Tesla is the barometer for the stock market, and it is bullish. I mean, on the weekly chart. Let's see this trend line. Okay, I think that's a very objective area for you to be looking for possible short entries, even if it gets higher. Because right now, RSI is not confirming this move, and this may be just a dead cat bounce. But you know what? If we have some shock in the economy coming, we're gonna have some issues, and this would be a great one. I mean, it's like there's a lot of meat on this bone, right, folks? All right. CCI is negatively divergent. Okay, we have some positivity forming. Okay, this is that move. Okay, so if it goes a little bit higher, look at that trend line that we talked about. Okay, I'm not going to go into full analysis here. Netflix is the other one that I'm beginning to get really interested in. You know, earnings are coming out in the next, another 10 days or something. Okay, we're churning at this major Fibonacci retracement. I mean, this is 100%, and we're basically churning, folks. It doesn't mean it has to sell off right away. It doesn't mean it can't go a little higher, but this is the type of stocks that we need to be looking for the next leg down, where there's a lot of meat on the bones, because I think the first 100 points is going to be a given, and over the next couple of weeks, I mean, a 38.2 retracement back down, I mean, we could be looking at some doozy of a trade here, folks, if you are smart and don't buy into the hype. Okay, don't become exit liquidity, please. Okay, you guys know about my consumer demand destruction. I think that's alive and well, and I think Costco is beginning to show you what they miss on their sales. Okay, and I think maybe one more quarter, I think there's going to be a whopper of a trade ahead of their earnings. But I do believe that we are imminently now in a territory where we have to be on guard. If you have your long positions, I'm not going to tell you what to do. And you know what the gist of my message is right here. Okay, recession's coming, folks. China is telling you that recession's coming. There's something imploding. I bet you it's Evergrande. Okay, banks are in trouble, even though they are heavily manipulated by the Fed and the central banks. Because if the banks go, I mean, the whole charade comes down, right? So here's my summary, right? October 2nd, stock market shock is incoming. That is the gist of this. How to prepare. Will we hit the upper long-term trend line? I kind of hope so. I mean, we're running out of time, though. 585 to 600 would be fantastic. I mean, at that point, I'd be going in with two fists, right? Going long on gold and, just shorting the crap out of everything. All right. But we got to do things and build slowly our positions also. You can't just go YOLO on everything. Okay. A sharp correction into elections is going to follow. I think that's the schematic that's going to come, followed by a massive rip your face off rally. So how great would it be if you could figure out how to make money on this coming sell off, the shock that's coming, and then ride the rally up without a lot of effort into February 2025. And that's what we intend on doing. Okay. And then the question I have is, what the hell is China afraid of? What are they afraid of? Okay. They're afraid of their imploding their debt market, the real estate bubble that they're in. Okay. They're bazookaing everything. They're basically trying to create the biggest short squeeze of all time. Watch what Nikkei is doing. Nikkei is falling as the Shanghai index is moving higher. I think that's going to put some pressure on the American markets too. Okay, especially when the futures markets open up. All right, there's going to be some issues, folks. You still got to watch this JPY USD. I didn't talk about it, but you guys know what to do. All right, this isn't over. The unwind has not happened. I think that's going to start shortly. Salah and Rosh Hashanah and Bayan Yom Kippur. That's October 2nd, folks. It's going to extend into 2nd to 11. Okay, market shock is incoming. Gold is warning you. It's currently at 26.47. That was last week, right? We hit 27.0870 and we pulled back. It's not going to go up in a straight line, but it is becoming parabolic, folks. Slight pullback to build energy to move higher. And those of you, I'm not going to tell you what to do, but gold is moving higher. 2850 plus in 2 weeks, folks. There, I said it. History rhymes. Look at all the previous Fed hikes, the outsized hikes that's happened. Look at what China is doing, okay? Apple, FedEx, NVIDIA, Costco. I think NVIDIA has the same type of accounting issues that SMCI has. SMCI is ringing the bell at the top, okay? The DOJ case, guys, for those of you that are poo-pooing this fraudulent nature of SMCI, maybe you should look look at what the chart is telling you. Okay, stop buying calls on this unless you're going to trade it short term. I do believe it's going to bounce a little bit, but guess what? That bounce is what do I always say? Short the rips. Keep note of the Fed pivots and cutting cycle. We talked about that, and you can go back to my previous videos and watch all of it if you want to. And critical SPY level this week to watch for is 561.67 still. When we break that, it's going to get pretty impulsive. Below things will start getting impulsive to the downside. Here's some limited, obviously we talked about this ad nauseum, but these are obviously we have more. And if you want more stuff and things like that, you're going to have to join our membership group. By the way, our membership group, there is one that is very, very affordable, $59.95 a month. And you get my morning commentaries. We'll give you the SPY pivots and the weekly watch list. Okay. And there's other more higher level coaching packages that we have and training packages. If you want to learn more about that, you need to contact me. Anyways, thank you so much for watching this video and putting up with my video. Okay, follow me at Galaxy Doc Market. Like us, share us, and above all, comment, good and bad. Tell me if I'm full of shit. If you think I'm doing a good job, let me know. That motivates me. And please subscribe and share and give me the thumbs up, okay? And then if you want to learn more about working with me, message me or click on the link in the description below. And like I said, I have people have been asking about it, so I'm going full board. I'm telling you that we're doing the $59.95 social media package per month. I think it'll be well worth it. Anyways, let's get some alpha. Market sell-off is coming, folks. Solemn Rosh Hashanah, October 2nd. Bye-bye.